What's good, my fellow stock market trader and investor homies? It's your boy Kevin. Welcome back to the channel. Yesterday was a big day for Tesla, Tesla stock, and Tesla investors, as it was Tesla Investor Day. And in today's video, we're going to be talking about why Tesla stock reacted so negatively to Tesla Investor Day. It's currently down 6% plus on the day. It hit lows of about 8% down on the day. And there's a lot of investors out there who think Tesla and Elon may have just ruined this big bull run that we have seen. Tesla up over 100% from the recent lows, has been on a massive bull run, and investors have been getting paid. Those who have bought the dip have been reaping the rewards. However, a lot of investors are selling off today as they think Tesla Investor Day was a miss. Let's break it down. Let's get it. Every year, Tesla Investor Day has investors, whether you're a Tesla shareholder or not, paying attention to what Elon Musk is going to say and he's going to bring to the table and share the plans for the future of Tesla. Well, yesterday was that day, and it had some mixed results. It had investors saying really good things about what he had to say, and it had some investors a little bit more nervous. So the Tesla stock, if we look at the chart, it's currently down 6.1% in today's trading, having investors selling this thing off left and right. And there's a couple of reasons. First thing we're going to talk about is what Elon had to say, the plans, the future for Tesla as a company. Then we'll go into why Tesla is down on the day and what I think is happening and what I think is going to happen and where Tesla stock is headed. All right, so Musk presented the third installment of his master plan, an update to his ambitious 2016 master plan part 2. All right, so the first thing that stood out to me during Tesla Investor Day was the sheer scope and ambition of Tesla's plans. Elon Musk and other executives presented a long-term roadmap that includes several new products, services, and markets. Some of these highlights were Tesla aims to continue expanding its vehicle lineup with several new models, including the Cybertruck, Semi, and bringing back the Tesla Roadster, as well as a compact car for Europe and other regions. The compact Tesla has me excited. You know, these tight city areas. I think that's, we're headed in this energy efficient environment, this energy saving environment. Why buy a big SUV when you can drive a smaller vehicle? So that compact car, I think, could be a really big seller. The Cybertruck is the big question mark, in my opinion, for Tesla moving forward. Is Elon going to be able to deliver on this Cybertruck? All right, so the Tesla Semi. This is Tesla verging into the logistics side of the business, and another way for them to branch out, another octopus tentacle to bring Tesla more revenue. So they're aiming at that freight and logistics market and promise to offer significant savings in fuel costs and emissions for those truckers. All right. So second, Tesla plans to enter the energy storage market in a big way with a new product called the Mega Pack. The Mega Pack is a large-scale battery system that can store up to 3 megawatt hours of energy and is designed for utilities, power grids, and other applications that require reliable and scalable energy storage. Tesla has already deployed Mega Packs in several locations, including Australia, California, and plans to ramp up production and sales in the coming years. Tesla stock is overvalued if you just look at it from a automaker perspective. But the Mega Pack, right, the semi trucks, the solar side of the business is what have investors overpaying, because it's not just an automaker. We have these other aspects of the business, right? Fourth, we have Tesla planning to expand its footprint in China. And we'll dive deeper into China in just a second. That's part of the reason I think Tesla is selling off today. So expand in China, which is already the world's largest market for electric vehicles. Tesla's Gigafactory in Shanghai has been a major success story for the company and has helped it to increase production, lower cost, and improve the overall quality of Tesla's vehicles. It now plans to build another Gigafactory in China, as well as a design center and R&D center. China is a key. When I say key, it is the key market for Tesla's growth. Without China, without China's business, Tesla would plummet. And the company aims to increase its sales and market share in the country. All right, last, Tesla plans to become more vertically integrated and self-sufficient by developing its own battery cells. This is a key part here. Motors and power electronics. Currently, Tesla relies on suppliers such as Panasonic and LG for its battery cells. What costs the most amount of money when building an electric vehicle? The battery. If you can lower those battery costs, produce them yourself, then your margins are going to increase substantially. This had my ears perked up like a dog about to pounce. If they can find a way to keep those battery cell production in-house, you're talking about huge margin increases. By developing its own components, Tesla hopes to reduce cost, improve performance, and have more control over its supply chain. All right, so all this stuff that we just discussed and highlighted that was talked about in Tesla Investor Day sounds really cool, right? It sounds like Tesla's moving in the right direction and investors should be excited. While I was excited, and I think a lot of other Tesla investors are excited, there wasn't really much to back up what he was talking about. And there's been a lot of kind of negative stuff clouding Tesla over the recent weeks. And let's dive into the negatives. We just talked about really good stuff that was brought up and provides that roadmap for Tesla to grow, expand, increase that profit margin, and also just back up the valuation, right? Investors have given Elon and Tesla a big runway to back up the valuation, and it's going to have to come to fruition here in the next couple of years. So all the stuff he said, I think, can help Tesla back up this valuation, but there have been some negatives that we do need to highlight. All right, number one is the Cybertruck. Cybertruck, I think, could sell a lot of units. However, we haven't got it on the road yet. It's been years and years since it was supposed to be in production. We did see a pre-production beta model of the Cybertruck. I thought it looked cool, and I still think it's going to sell a lot of units, but how long is it going to be before it hits the streets? All right, second negative also could be viewed as a positive, and that is the $25,000 Tesla. There's been speculation that Elon is going to cut prices drastically here in the next couple of years and even possibly unveil a $25,000 Tesla. Now, a lot of investors are hyped up about this, but some investors are a little bit nervous. Let's hear what Kathy Wood had to say about this cheaper price point Tesla, and then I'll talk to you guys about my opinion on this.
We are analyzing battery technology, but more important, drivetrain technology, which includes batteries. And if you look at the cost curves associated with drivetrains, what you'll see is that for every cumulative doubling in the number of electric vehicles produced and sold, costs decline by roughly 28%. And it seems as though already the total cost of ownership of an electric vehicle is lower than that of a gas-powered vehicle, which means, which helps us understand why last year electric vehicle sales globally were up, I believe it was 62 or 64%, while gas-powered vehicles were down about 7% globally. So the electric vehicle shift is underway. Consumers want electric vehicles, a total cost of ownership cheaper. So last year...
All right, so Kathy was basically, she's hyped up. She's saying that this is not due to lack of demand. You know, when a product price is cut, sometimes it's due because people just aren't buying the product and there's no demand. Kathy thinks this is because Tesla isn't spending as much money to produce the vehicle as they were before, because they're becoming more efficient. They're becoming more efficient in the gigafactory phase. The manufacturing is becoming much more efficient. So why not pass that savings on to the consumer and become that much more ahead of the competition, right? We see other companies like Lucid, Rivian charging upwards of $100,000 per vehicle. Well, if Tesla can roll out a vehicle that competes with those other companies from a spec standpoint, from a range and a performance standpoint, but it's 1/4 the cost, obviously they're going to dominate from a market share standpoint. But some investors are still skeptical and think that it's due to lack of demand. I'm on the front. I think it's a little bit of both, right? I think there's still demand for Tesla. It may be waning a little bit from the early days when Tesla was this new thing on the block, the new kid on the block. Everybody wanted one. You don't have that anymore. But it doesn't really matter, because what backs it up are the specs, the range, the performance. It's still a decent looking vehicle. And if it can come in cheaper than the competitors and cheaper than the peers, but still offer that better range, obviously people are going to continue to buy the vehicle. So I do believe if Elon can come in a little bit cheaper, Tesla will dominate the EV space. And I think the biggest reason investors are a little bit scared right now is that Elon sent out a tweet, talking about the origins of the Rona. And why does he need to do this? Why does he need to do this? I think we're all pretty well versed on where this thing came from. At least I think I know where it came from, but that doesn't matter, right? You're running a company, and your company depends on China to back up its valuation. If China said, Elon, you can't do business anymore here, Tesla would drop probably by 60, maybe even 70%. So for Elon to be out here getting his feet wet in the political space, if he wants to do that, he needs to step down from Tesla. We've seen this over the recent months since he acquired Twitter. He's been dipping his toes in the political space. And if he wants to do that, more power to him. Firm believer in freedom of speech and the First Amendment. But when you're running a company and your company depends on a country, you probably should not attack that country. Now, I'm not saying I'm a huge fan of what that country did, because I'm absolutely not, in the way they handled things. However, when you're the CEO of a multi-billion dollar company who's trying to become a $1 trillion company, who once was a $1 trillion company, you're trying to get back up there, probably better to stay away from those hotbed topics. But Elon has not been doing that. So let's wrap this up by looking at the chart. I'll offer my opinion on Tesla, where I think it's headed. And I really thought Tesla Investor Day I thought he did a good job. And I thought the roadmap is exactly what the roadmap needs to be, right? We have the automobile manufacturing side of things down pat. The manufacturing is awesome, right? You're getting it done cheaper. You're expanding. You're building more gigafactories. You're going to be able to do it even cheaper when you start manufacturing and producing your own batteries, and you don't have to outsource as much stuff. So they're doing it cheaper, they're doing it better, and they're doing it faster. Awesome. Now we need to get the mega packs, the solar stuff rolling. And once that happens, the semi trucks, Tesla is going to be hard to beat. They're going to be an empire in this clean energy, non-combustion engine automobile space for a long, long time. It's off the highs of 400 plus. And right now we're trading at, let's call it 200. Right now we're trading at 190. So it's looking like it may be a decent deal. Still a hefty valuation, right? The market cap is way, way bigger than GM, bigger than Ford, bigger than every other auto manufacturing company. But, right, it's looking like it's backing it up. If Tesla rolls out that $25,000 baseline model, they're going to be hard to beat, and they're already hard to beat. So right now, excuse all these drawings on here, we're trading at 190 off highs of 400. I think I'll be buying pullbacks. I will be buying dips. If we can get back to, I should have loaded my whole net worth in. at $100 per share, where we were trading at a couple months ago, but hindsight is 2020, and I will be buying dips. All right, that's it, guys. To wrap it up, I think Tesla is headed in the right direction. I liked Investor Day. There was some stuff not to like, but there's always some stuff not to like. Love you guys. We'll catch you in the next video. Until next time, peace.